my prediction of $2 million in today's dollars is exactly the same as Michael Saylor's prediction of $13 million in 21 years. See, because I just said today's dollars. All he's done is put compound interest for 21 years on $2 million to get to $13 million. Or not him, but that's how the math works, okay?
Yeah.
Compound interest is the eighth wonder of the world. Somebody said that. I don't know who it is, but it is true. It's an exponential growth of your debt because of compound interest. It's too late. It's over. You cannot get out of this debt spiral. It is locked in right now.
Popular Bitcoin bull and sound money advocate Greg Foss has had a massive $2 million price prediction for the leading cryptocurrency since at least 2021, when he first publicly discussed how Bitcoin's actual value is way higher than its price. Then, Foss argued that Bitcoin is insurance on the decaying credit quality of fiat-issuing sovereign nations. As such, it is credit protection on a basket of fiat currencies, including the US dollar, which is losing about 8% of its value annually, despite being the world's reserve currency. According to Foss, there is a 100% certainty that fiat currencies will continue to debase on an accelerated basis because of the global debt spiral, with a 100% certainty that all fiat currencies, including the US dollar, will eventually go to zero. Foss says it is extremely important to shore up your portfolio by investing in hard assets like Bitcoin, gold, and real estate. However, he acknowledges that Bitcoin is the fastest and strongest horse in the race against fiat debasement, one that is certain to keep increasing in value exponentially as more and more people come to the eventual conclusion that traditional asset classes provide no protection against fiat debasement. In a more recent interview with Natalie Brunell, Foss again reiterates his $2 million prediction for Bitcoin, pointing out that it is quite similar to Michael Saylor's $13 million prediction for Bitcoin by 2045. Though Bitcoin's current price might not exactly be where Foss and others had envisioned earlier this year, or even in 2022, the former credit analyst is certain that the much-awaited price explosion is just around the corner and due to happen anytime soon. We will bring you clips from Greg's discussion with Natalie and recent super bullish tweets from anonymous Bitcoin analyst PlanB. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos featuring insightful analysis and important strategies from some of the industry's brightest minds. Thanks for the support and enjoy the video.
Well, let's start with over the last year, some of the progress that's been made. You can talk about the ETFs, but they were inevitable. They started in Canada a couple of years earlier than it was in the United States. So it's hard to believe that Canada was a leader in the ETF space, the Bitcoin ETF space. But yeah, we were. We expected it to come to the US. What's really important is what the research that BlackRock's putting out right now on Bitcoin and grasping some of the nuggets that the Bitcoin community has been using for literally 8 years. You know, the concept of digital gold. Pretty simple, but you know, it's when BlackRock says it, it has a little bit more penetration within the community. They say it's a non-correlated asset, a risk-off asset. Now, I don't believe that it'll trade as a risk-off asset in the next downturn, and I believe that it will probably still be correlated. There'll be hedge funds that will short Bitcoin to hedge their equity exposure or other TradFi asset exposure. But in my opinion, they shouldn't be, because, you know, I think of Bitcoin as a risk-off asset. As you know, I valued Bitcoin using credit default swaps on sovereign debt and was able to come up with a valuation of Bitcoin based on the debt metrics, the market that I had grown up with for 30 years, the debt markets. And everybody should know that the debt markets are far more important than the equity markets. They tend to get things and sniff things out earlier. It's amazing what BlackRock is saying. You know, there was the headline that I won't be able to say it verbatim, but they basically said BlackRock suggests owning Bitcoin as a hedge to the $35 trillion of debt, of U.S. debt. in case
Yep.
that shouldn't mature or roll over. And
Right.
we've been saying that the whole time, right? Like it's the debt spiral, the mathematics. You know, do the math. It's so simple when you see the metrics of the fiscal situation in the U.S., but also in every other G7 nation in the world, as well as all the other 200 countries that aren't in the top economies. Everybody runs the same playbook. So BlackRock saying it is extremely important. Did the price get to where we want? It's still a rounding error. You know, you can't look at what the next $10,000 fiat dollar move in Bitcoin is. Look out 5 years, and I believe that you'll be talking about, instead of $10,000 moves per day, or, you know, not per day, but cyclical, you'll be talking about $100,000 moves in Bitcoin. What is the next $100,000 move? So that's so important that you get an established player, world's largest fund manager, and Larry Fink on CNBC telling Jim Cramer, I was wrong. It's possible to be wrong. And then you change your view.
The BlackRock paper Foss is talking about was written by the firm's ETF chief investment officer, its head of crypto, and its head of fixed income global macro. The authors argued that the world's largest asset management firm is quietly preparing for a $35 trillion Federal Reserve crisis with Bitcoin. They expect that as fears mount about the dollar being on the verge of a complete collapse, more investors will diversify into Bitcoin to avoid the collapse. The growing concerns in the U.S. and abroad over the state of U.S. federal deficits and debt has increased the appeal of potential alternative reserve assets as a potential hedge against possible future events affecting the U.S. dollar, the authors began in the paper. This dynamic appears to be also taking hold in other countries where debt accumulation has been significant, they added. In our experience with clients to date, this explains a substantial portion of the recent broadening institutional interest in Bitcoin. BlackRock is repeating the same talking points and arguments that sound money advocates like Foss have been making for years. This is truly a full circle moment, because not only is BlackRock one of the most powerful financial institutions in the world, but its CEO, Larry Fink, is one of the most powerful and influential people in the world, and is now speaking in favor of Bitcoin on CNBC against the same system upon which his entire empire was built. Let's get back to the video.
They definitely see some weakness in the economy, okay? The beige book, what they see in the beige book that's not published, they have a first look at that. I have some anecdotal evidence. I was vacationing in Maine for our regular summer vacation. This was the lightest traffic that I've seen coming into New England over the Labor Day weekend that I've seen in the last decade, okay? People not traveling. The restaurants were not nearly as full. They should have cut on a strength of the perceived strength of the economy, not just American economy. Have they noticed what's happening in China and understanding that China led global growth for the last decade? And China now has 90 million empty condominiums in a country whose birth rate is declining, so that who's going to live in those?
Yeah.
The China stock market's getting shredded. The real estate prices, Evergrande, fallout. No one's talking about that. So does the U.S. set policy for the whole world? I'm afraid they do. So what do we have to worry most about? Stagflation. This will be something that I think we really have to look at. And Mark Moss mentioned this on your podcast as well. He's worried about the inflation component of not holding rates high enough to snuff out inflation. So I think there'll be stagflation. Jamie Dimon thinks has similar thoughts. I think Jerome Powell, the jury's out as to whether he'll be the greatest Fed chairman. But in the short term, he's engineered a landing, and it has not been a crash landing. So I applaud him for that, but it's far too soon, in my opinion, to say that it's been a success. Mm-hmm. And it's because of things like China, because of the potential for stagflation, because of anecdotal evidence like restaurant index, the U.S. restaurant index, and the lower end of the consumer credit concerns with the low end consumer. All of these things are flags for me that I'll be looking for.
In other news, anonymous Bitcoin analyst PlanB recently painted an exciting scenario for Bitcoin investors, describing how quickly Bitcoin's price can move from just above $65,000 to $1 million by the end of 2025. His post reads, "Just a scenario. October, classic pump month. Bitcoin to $70,000. November, Trump wins the election and ends the Democrats' war on crypto. Bitcoin hits $100,000. December, massive ETF inflow. Bitcoin hits $150,000. January, crypto people/companies return to the United States. Bitcoin hits $200,000. February, power law crew sells. Bitcoin drops to $150,000. March, Bitcoin is declared a legal tender in Bhutan, Argentina, and Dubai. Bitcoin hits $300,000. April, Trump and the U.S. start building a strategic Bitcoin reserve. Bitcoin hits $400,000. May, other countries, except the EU, join the rate race. Bitcoin hits $500,000. June, several AIs start using Bitcoin to autonomously arb TradFi. Bitcoin hits $600,000. July to December, face-melting FOMO. Bitcoin's all-time high is $1 million. 2026, distribution phase. Bitcoin drops back to $0.5 million. 2027, another bear market. Bitcoin bottoms at $0.2 million. Do you agree with PlanB's scenario for Bitcoin? Please share your comments as well as your thoughts on Foss's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.